bring you a mood check of the markets as they opened just a few minutes ago. Well, the big question that we were asking this morning was whether Sensex will breach the 84,000 levels. And well, it's kissing distances, if one can call it, away from that number. Markets at about 83,900 odd levels, just a little short of 100 points from those 84,000 levels that we had seen earlier. Meanwhile, the Nifty 50 is also up, almost touching the 25,600 levels in early trade this morning. News coming in from the mid-cap and small-cap space is a little more muted than the benchmark indices, but we are still seeing gains anyway. Meanwhile, volatility in the Indian markets, the India VIX, has also reduced by almost a percentage point in trade this morning, down to about 12.41 levels. Let's see where the action in the markets is coming from this morning. The IT sector seems to be the toast of the Dalal Street this morning. Let's pull up the Nifty 50 heat map and see what are the kind of gains that we are seeing. And of course, look at Infosys this morning, up by more than 2.25% in trade. We are also seeing healthy returns coming in for investors for TCS at about 1.4%, HCL Tech at about a percentage, Tech Mahindra, Wipro, both in the territory of almost 1.5% gains or so. Meanwhile, mixed view coming in from the banking and the NBFC space. HDFC Bank is down about 0.6 of a percentage point, but ICICI Bank, reeling out of pain for the last 2 days, seems to have made some recovery. Meanwhile, the heavyweight Reliance Industries is down about 0.25 of a percentage point. Well, let's try and unpack all this. We have a very special guest joining us this morning, Avinash Gorakshakar. Thank you so much for taking the time and being here with us on News9. Help us put what we are seeing on the screen in perspective. What's driving the upbeat momentum in the IT stocks this morning?
Yeah, good morning, Kartik. See, my sense is I think, tailwinds in the US market seem to be improving, and I think clearly the markets are expecting that. Hopefully, I think the trade deal kind of suspense is now going to be over.
Okay.
Mr. Donald Trump has already said that beyond 9th of July, he's not going to extend the deadline. Specifically for Indian companies, Kartik, I think the good news is that very soon a US-India trade deal will be announced. And I think, sectors like IT, pharma, auto components, these are sectors which are
To cut
going
you
to be
short, but
impacted.
can we be sure of that just as yet? Well, while we know that negotiations have entered the 6th day, but we are still about a week to go, and we don't know how much ground US will concede if India doesn't concede ground on agriculture and dairy. So are we counting our chickens a little too soon?
No, I think it's very difficult to, visualize this event. But I would say that, the US will not like to be completely harsh on India. I think they look upon India as a very strong trading ally partner. And I think, net, I think in the overall scheme of things, US will not be so harsh on us. So I think, we've got to keep our fingers crossed, Karthik. But I think this definitely is an event which is awaited very long by the markets. I think hopefully it should be, a neutral or maybe a balancing kind of act from the US.
All right, a neutral or a balancing act. Well, we don't know how balanced it'll be for the steel sector and the aluminium sector. And that is again something which has come under the wrath of the US president, and tariffs globally have been imposed on these two sectors. But again, what we are seeing this morning on the steel sector, JSW Steel, Tata Steel, both up about 0.7 of a percentage point or more. So Avinash, is there a guarantee sort of now kicking in for the sector that there won't be a real adverse impact of the tariffs that come in from a week from now?
No, I think if you see the metal stocks, they've come up from their record 52-week highs, and I think now valuations, on a very broad level, Karthik, don't look very expensive. My sense is that companies which are integrated like Hindalco, Tata Steel, JSW, Vedanta, typically companies which are large in size, which have got a very large domestic market. I think we are looking at tailwinds, from the Indian market. A lot of domestic demand is getting fueled by infrastructure kind of spending, both by the government and the private capex. So I think, markets are looking at some kind of positive trigger, in terms of price improvements in the global market. So I think net, we are structurally positive on some of the metal companies, especially the pipe manufacturing companies, where we believe valuations are not very expensive. And I think if earnings growth do come in much better than what the street expects, then I think you could see a good pump up in the stock prices of most of these companies. So I think, got to take a stock specific case here. But broadly, yes, I think unless metal prices improve sharply, hopefully once China starts buying in a big way,
Yeah.
and of course the U.S. trade, India trade deal, is also favorable. I think these could be partial other triggers which could actually drive valuations upward. So I think we'll have to wait and watch for at least the April to June quarter. But net, I think valuations seem to be attractive.
All right, valuations seem to be attractive, but wait and watch continues to be the mantra. Stay with me, Avinash, because interesting data coming in even from the auto sector, which I want to discuss with you. Mahindra & Mahindra has emerged as India's second largest passenger vehicle manufacturer for the third month in a row now, overtaking Hyundai and Tata Motors in the month of June. Now, the automaker, which exclusively sells SUVs, recorded domestic sales of over 47,300 units during the month of June, ahead of Hyundai's 44,000 odd units and Tata's a little over 37,000 units. Now, this continued streak shows Mahindra's rising dominance in the SUV space, boosted by strong demand for its rugged feature-packed models like the Thar, Scorpio, N Bolero and the XUV 700. Well, the company's expanding electric vehicle portfolio featuring the XUV 400 and models like the BE6, as well as the upcoming XEV 9e, is also expected to play a key role in its future growth, as per the company. Meanwhile, Hyundai's diverse lineup, including popular ICE models like the i20, Verna, Creta and Alcazar, as well as EVs like the Ioniq 5 and Creta Electric, couldn't help it reclaim the second spot yet again in the month of June. Meanwhile, Tata Motors, which offers a broad mix of hatchbacks, SUVs and electric vehicles like the Nexon EV and Punch EV, continues to face stiff competition in the rapidly shifting PV market. Avinash, look at the chart on your screen now. We are looking at good results coming in, good numbers, in fact, showing up for automakers. Maruti Suzuki continues to reign as the leader on Indian roads, but Mahindra & Mahindra catching up and really defeating competition fairly well. Something that should reflect in its valuation over time?
No, exactly, Kartik. If you see Mahindra and Mahindra, they have been, increasing their market share in their traditional product categories like tractors. In the UV segment, also, I think, this is one company which has managed the show very well. Strong volume growth plus good margin kind of stability maintained by the company over the last, say, 3 to 4 quarters. And I think, product innovation has been very aggressive for Mahindra and Mahindra. They've invested more than 1,000 odd crores for their electric venture. And I think in the electric vehicle business, the company has already stated that in the next 2 years, they aggressively want to grab up market share. So I think, M&M is a very strong candidate for re-rating. I would not be surprised that, from number two, within the UV market, they're already number one. But overall, in the overall sales number, they should be easily catching up now along with Maruti. My sense is that, of course, Maruti is also a very strong kind of leader in the passenger car segment. And I think good rural demand this year could possibly be a good kind of trigger point for the company. So I think net, I think, it's good that auto companies are now showing strong volume growth, because there were some kind of doubts earlier because of the rare earth issue, but this seems to have eased out. I think we'll have to see individually how companies, battle out this kind of critical input, shortage from China. But
Right.
otherwise, I think broadly with a good monsoon, this year should be a good year for the overall automotive sector.
Okay, and any view on Tata Motors, the kind of cuts that we've seen in the stock price of Tata Motors over the last 1 year, still trading well below the 700 odd levels, 700 rupees per share. So any view on Tata Motors, is that going to be up for a re-rating as well, in your opinion, Avinash?
See, I think my guess is that with a good monsoon, with good infrastructure spending by the government and private capex, commercial vehicle sales are bound to go up. And I think we could see that first in the first quarter after, Q1 numbers of FY26 are declared. But overall, I think the second and the third quarter are going to be very critical. Most importantly, I think one big trigger point for Tata Motors is the demerger development, where the management has clarified that by December, the JLR business and the domestic business will be hived off in two separate companies. So I think that remains to be a key trigger for the stock. So I think hopefully in the second half of this financial year, you'll see a decent amount of upmove in the stock. Hopefully, I think, the JLR business will be valued at a much significant valuation as compared to the combined entity now.